Yo, what is going on, comrades? It is Moleki, the growth and dividend growth investor. Welcome back to the channel. Today, I just have a portfolio update of all my accounts that I have money invested in. So in my high growth portfolio, I have $72,338.05. This portfolio has been looking pretty good over the long term because it's been, if you look at this chart right here, it's been going pretty much up. In the entire life of this portfolio, like you can see that there were some drastic downs. But the most important thing is that at some point it eventually got back up. You notice it went down here, it's going back up, came a low drop over here, then ultimately the market skyrocketed, and then the pandemic happened, immediate drop, came back up, and then dropped again. And I'm not too concerned about any of these drops because I'm continually putting money in, which helps me cost average all the different holdings that I have. So for my portfolio, I don't think I had any new dividends paid out since the last time I made this video. The last time I made this video was about a month ago, so it was a decent amount of time before you guys saw like what my total portfolio value was. So no dividends paid, same holdings here. Tesla's still doing the same thing here. But let's just go over the 1 month performance because if you look at the all-time, it looks good, but a lot of people they're focused on like the day-to-day buying and selling of stocks, and sometimes that is not the way to go. The way you want to be investing is for the long term. So if I just focused on what my portfolio looked like the last month, it's just out of control. Like my portfolio would have went up to $81,000, then would have dropped to $63,000, then it went up to $72,000, which kind of stabilized to this point. If I was one of those panic sellers, I would have been at $63,000, like, oh my God, it's never going to come up again. And then I would have lost almost like $12,000 in gains. I have a solid belief in the holdings that I own. That's why I'm not panicked. So every single time you see all these drops, I'm putting that $125 every single week plus whatever extra I can conjure up. So let's just go over the different activity that I have. So no trading, no dividends. I just want to show you guys all the different deposits I have. So in the month of August, let's just focus here. $125 put in, $125 put in, a little extra money put in here, another $125, a little extra put in, then another, that consistent $125 every single week is happening on top of the extra money we put in. So I count all this extra money extra credit. So I'm cost averaging my money very well, and this is good stuff. And I hope that you guys don't panic sell whenever you see the market go down, and you just hold on. You did your research, you hold on to your companies, and things will recover. So ultimately, we want to just keep seeing this thing grow and grow. Let's just look at the holdings tab real quick. So 3 positions. Again, I don't think I'm going to be switching that anytime soon. I have a solid belief in everything I own. Cost basis, I have $40,594 invested. Value here, unrealized gain. If I sold all my stuff right now, I would have made a $31,000 profit. We're focused on the long term. I've only had these assets for about 1 or 2 years, I think. And if this is what happened in 1 or 2 years, let's focus on the long term. I want to minimally hold these for 10 years and see what happens. Tesla is an incredible company. I'm not going to be getting rid of that company anytime soon because I believe in Elon Musk's. I see his vision very clearly, and especially after this Battery Day presentation he had, he literally showed all investors as well as the investment community and the media a roadmap to Tesla being a money printer. So that was the battery technology that they discussed was incredible. Maybe he doesn't hit the timelines according to when Joe Schmo wants it, but he always delivers on what he promises. What might be a couple months off, but it's happening, and he's still moving forward, and this company's moving forward. So this is an amazing company to own. Arc Innovation is, Kathy Wood is at the helm. She is a genius, brilliant portfolio manager as well as the chief investment officer for this actively managed ETF. They're doing great things over there. They're the ones that are putting unorthodox price targets on a lot of these companies, and it seems like it's been paying off. And then Triple Q is a technology focused ETF, and technology's been killing it. Actually, more so than not, technology has been more of a defensive sector in the last downturns than your typical consumer defensibles. Technology has actually been pretty resilient in these really tough times. So just want to say a couple of those things. We're going to switch over to the dividend portfolio. The dividend portfolio is not a huge portion of all my assets, but it's one of the portions that I'm the most excited about because I'm picking a lot more individual holdings. Let's talk about the value: $13,664.54. Earned dividends: $317.20 totally. Let's look at the all-time. The total amount of money I have invested in this account is $12,000. So whatever this is appreciation plus whatever dividend. Or actually, I think this is not even accounted for this. It's just the appreciation. So I put in $12,000, and this thing has been a roller coaster. Up, down, up, down, up, down, up, down. What matters though is like if I drew a straight line, yeah, it's having some difficulties, but it's still going up. And a lot of people think too much of a short term. Oh my God, it's down. I need to sell my stocks. Oh my God, it dropped down again. You need to focus on the long term. Cannot be focusing day to day or what these day traders or penny stock trader people are talking about. Like, investing is about long term growth. Just like in my other portfolios, look at the 1 month. If I had the mentality of these people like, oh my God, I'm losing money, I need to sell out, I would have sold my money here, would not have had a chance for it to recoup. Same thing, would not have a chance to recoup. So it is downtrending down in a month, but here's the thing. It's uptrending for the overall. So again, some of these downs, it doesn't matter. A little bit different strategy compared to the growth portfolio compared to this one. For this one, I was only able to load all the money, and I can't add more money to get this cost averaging benefit over here. Where in the growth portfolio, I could do that. In this one, I can't necessarily do that. So whatever money I put in, it's just got to do its thing. Whatever dividends get paid out, that can be reinvested in. But for the most part, I wish I could be putting more money on some of these downturns. So that is kind of that going over. I did make a couple of different changes in the portfolio, so I just want to talk about a couple different things about all the different sectors I have. So I have 10 sectors. This is not exactly the same of what your traditional sectors are, but let's just discuss them real quick. So in utilities, my main theme for the utility sector is I want to be focused on companies that focus on renewables. Brookfield Renewable, BIP, Duke, Dominion. Dominion sold their natural gas pipeline to Berkshire Hathaway, American Water, and then NextEra Energy, another renewable energy company. Let's talk about industrials. Now, it's been a month since I made this last video. I went down to about 51 total holdings. I completely purged a lot of things, but then I came back to the realization that there's a certain amount of companies that I do want to continually own, just because I want to have a higher market share in the top companies, as well as I've been seeing a lot of these companies just sitting around. So, in this pie, I used to own 6 different holdings, but then I just wanted to switch some things up just because what I've been seeing with my eyes. Boeing, at some point, I do believe they're going to recover. I mean, they've been shitting the bed, to be honest. I would, in this country, we spend a lot of money on our military, so I did want to add in Boeing again because I used to not own it, but going forward, they still have some military contracts, Lockheed Martin. I added Raytheon and Boeing, so those are my 2 additions in terms of that. The military complex is not going away in this country, so why fight it? Join it. So Boeing. I used to own UPS. I added FedEx because in the last month and a half, I could not stop seeing FedEx trucks all over the place. So if you're looking either FedEx or UPS trucks, I am seeing these trucks everywhere. So if you guys are looking for a very good dividend play that can grow over time, these are 2 things you might want to look at. Lockheed Martin just increased their dividend. Same with Honeywell. I got Republic Services, which is another garbage company. I added Caterpillar, and then Raytheon is just another military industrial complex stock. So again, go with it. Let's talk about consumers. So what I did with this one, I added the consumer cyclicals with the consumer defensive, just because I think, to me, any type of consumption is consumer. So I just made it simple. I don't want to go too crazy. Again, I had 6 slices in this one. I actually owned Altria as well because I wanted to have that higher income. But then I decided that, because I have a higher yielding income play in this portfolio, I decided that, I don't want to focus on the Altria. I want to focus on growth in this category. So McDonald's, great company. Walmart. Walmart is trying to compete with the Prime service. So this is a company that a lot of people are not talking about, but this is something you might want to be putting your money in. PepsiCo, Home Depot, Procter & Gamble, Costco, Nike. I'm wearing a Nike shirt right now. I love the brand. They just make high quality things. Top secret experimental. So this is that income play I was talking about. So what this is, it's called QYLD. It's a Global X Nasdaq 100 covered calls. What this thing does is it invests in the Nasdaq 100, and what it owns, it puts option calls that are covered with the stock. And so what it does, it yields about anywhere between a 10, 11, or 12% yield that pays out monthly. I believe the expense ratio could be between anywhere like, I think it's like 0.6. So I'm not sure what the expense ratio is, but this is an income play that I wanted to have. I mean, it's been giving me a decent amount. Like the market gain is $60 here, but also like the earned dividends $30. That's amazing. So this is my income play, which helped me get my portfolio to about a 4% dividend yield. If I didn't have it, it might be at around like a 2.5%. Consumer, let's talk about real estate. So in real estate, same thing. About a month and a half ago, I purged a whole bunch of stocks out of this sector, but then I decided, you know what, like the companies that I want are the ones that are building the future. So I want to put the data center, because I just had one of everything. I had this, and Avalon Bay. Those are the only companies I want. But then I decided, you know what, I want to add in store capital, and then I want to add the data center REITs again, because you know what, with all the research, I was looking into IBM and how these companies are going in cloud computing, and they need more storage. There's nothing we can do about it, and these companies are in a poised position to benefit off of it. So they don't have high yields now, but they can, and they will. Information technology, your typical Apple, Microsoft. These are the two companies you need to have in your information technology sector. Add in Visa, that'd be great. I have Qualcomm, Broadcom, IBM. I'm a little skeptical about this company right here. I do like the change in leadership. I do like their CEO. I do like their efforts into machine learning and AI, as well as cloud computing. So I think, if they actually get it together, they can be a market leader in those categories. But, they're going to be fighting against Microsoft as well as Amazon. So if they deploy their resources correctly, they can be a top contender, and they have a good dividend yield. Intel's been getting shit on for like the last couple weeks now, and I don't understand. I understand why, but this company is a cash cow. They make so much money. I don't know why investors aren't buying the dip, and this is a great dividend income play, and they just make a ton of money. So I don't know why people are like overlooking it to invest in Nvidia or AMD. This is a play you want to go in. Yeah, they postponed one of their chips, but I mean, things happen. But this company is a cash cow, so definitely want to be looking into that company for anything in the information technology sector. I'm going to be honest. Let's talk about the healthcare sector. I don't really know too much about any of the immunotherapy drugs or anything like that, because I'm a simple man. I'm not going over. I don't know what a lot of these companies do. All I know is somehow insurance pays them and they make money off it. So in the simplest terms, I just want to grab all the United States market share, the higher market share, like the top companies, and just put them here. They pay a decent dividend. And especially going forward, as a side note, I'm kind of a little bit all over the place, I know, but all my allocations are 10%. I used to have a higher allocation technology, but I decided, you know what, I want to have equal weight sectors. Let's talk about financials. Now, before any of you say anything, I know Visa should be in information technology. I understand that. But every time I swipe the credit card, money leaves my account. So I count this as a financial company. But this really should be in information technology. But I want to have a little bit more growth in this portfolio. And Visa is a great company. So since there's only 6 holdings here, could be a higher portion of stock or money deployed to acquire this. Main Street Capital, Brookfield Management. A lot of you guys probably haven't heard about this one, but they do great business. JP Morgan, Bank of America. I mean, I used to have Citigroup, and I wanted to add like PNC, Ally, and US Bancorp, but then I just think of way too many banks. I'm just going to focus on the 2 biggest and just call it a day. Let's talk about communication real quick. I used to own Verizon in this pie, but this pie to me is about the streaming wars that's going on right now. Disney is in a poised position to take a decent amount of market share. I'm not going to say they're going to take a market share. They can share the market share with Netflix. Like Netflix is killing the game. Once Disney's theme parks and everything open up, their dividend is going to not be suspended anymore, and then we can finally get them to the level that they want to be. So, they've been taking a beating, but I'm gonna buy the dip. Like Disney is a company to own. Like people are fanatics about the brand. Doesn't have the highest yield, but like once they get that streaming service up and running, like and get more subscriptions, like they're gonna that's the area you want to be looking for. AT&T. I used to own AT&T and Verizon. The reason why I'm choosing AT&T is Verizon does not have a streaming service. I think the companies that are dying are the ones that are not innovating, and the fact that AT&T is trying to get into that area is showing me that they're trying to innovate. I'm a huge investor in Tesla because of the constant innovation that Elon Musk does with those vehicles and what those engineering teams do. AT&T is showing me that they are an innovative company and they want to keep building. Yes, everyone's going to have 5G. Of course, that's innovation. Yeah, but you know what? Verizon, T-Mobile, you need to have a subscription service if you want to move forward. Like these two companies are owning the streaming wars. I would have Netflix if Netflix had a dividend. I would have it right here, but it does not. Let's talk about another thing. They have been aggressively paying off their debt. Their dividend yield is amazing. Their CEO is, turning things around. They're going to the streaming service. They're implementing 5G. AT&T is to me the winner out of all the phone services. Let's talk about raw materials. This actually is one of my favorite sectors. Iron, steel, gold, precious metals. These are things that are used in like computer products, semiconductors. Gold is a great semiconductor, so Newmont Corp is a company you might want to look at. Great semiconductors. And when deciding what I want to invest in the raw materials, I could have picked construction products and chemicals. To me, I don't see a lot of growth there. What I do see a lot of growth is like using like lithium and different metals to use the lithium-ion batteries, or especially Tesla had the battery, they all the different types of components. Iron is a huge thing that they're using there, cobalt, nickel. So these are companies that I want to invest in that are going to kind of tie in with what is the trend going forward. You guys are wondering why I have ExxonMobil here. I didn't want to have an energy sector. I just think it would have been complete waste because I would have had almost absolutely nothing allocated there. But in the transition of moving to fossil fuels to renewable energy, ExxonMobil is still in a good position to help with that transition. You can't just flip the switch and then go 100% renewable. In the process of going renewable, we need to have some sort of oil companies continually producing gasoline, diesel, just so our economies can run. So saying that this company, I used to be very bearish on this, but then after doing some more research and watching some other people on YouTube, it is actually a very smart play to be holding on to Exxon because it pays a good dividend. And in the transition, which again is not going to happen in 5 years to full renewables, it's going to be in the next like 20 or 30 years. So this company is still going to be around, and they have a huge R&D budget to finding new technology. So this is something you guys might want to look at. Also, I really like wheat and precious metals. I wish it paid a higher dividend, but that is okay. So these are all my pies. Like I said, 10% allocation to all of these. Let's just talk about my total portfolio. So in my total portfolio, I have $127,980. I have a work-sponsored 401k where they only match me a dismal like 2%. It's not even worth doing it, but I mean, it's still something. So I have $41,978 from there. These are the different allocations that I looked up for a 2060 Vanguard target retirement account. So showing it on this pie right here, it's about 32% of my portfolio. So this is your typical index investing, total market, total US stock market, total international. This is encompassing that with some bonds. And my next move over here is the Roth IRA dividend. Very small portion of my total portfolio, but is one of the things that I spend the most time on, is the most exciting thing. I love the aspect of dividend investing. I cannot wait till my growth account hits my number that I have in my head so I can switch over to the dividend growth. I just love the fact that you can see that the income come in. And so I have 63 holdings, about a 4.16 dividend yield, expense ratio 0.1, so about a 4% dividend yield. And hopefully this dividend grows over time because the companies grow their dividends over time. So I would like to see dividends grow. And then my growth holdings, I'm not going to keep going, boring you guys to death right there. 56% of my total assets. So this is every single dollar I invested. I do not own any real estate. I do not own any more bonds. I don't own any more assets. I really don't even have too much in my bank account counting my emergency fund because I want it to be deployed here. So there's that. Let's talk about my dividend income. So I could have sat and bored you guys to death with all the different activities from all the companies paying out. It's very exciting for me, but it's probably not exciting for you. So what I did is I built this graph over here, and I just want to plot it on this thing showing all the different amounts paid out. So these are all the different amounts paid out. The highest was $51 in March. I was looking through September's, and September's not fully over, but I believe September is going to be over $40, so it's going to kind of put us over here, which will be fantastic. So total amount, I've totally invested 12 grand. Total dividend income so far. So if you add all these up together, I have $176.06 that I got back from companies for this $12,000. Average monthly income, if I divide that by all of this so far, it would be $22. So about $22 a month is what I'm getting. So it's not too bad. It's about like one meal at McDonald's for me, but that's fine. Ideally, what I would like to see is over time, I would like to see this uptrend, a nice uptrend. And another thing I would like to see in January 2020, it's $2.09. Well, in January 2021, I would like to see that double. And then January 2022, then double again. I really would like to see this, and I would like to see it uptrend over time because ideally, when I retire, I just want to live off the dividend. I don't want to be selling my principal or selling stock just to fund my retirement. That is a huge no-no for me. All right, so this is basically it. Guys, I really appreciate you guys watching this video. If you have any questions, let me know. Don't forget to like, comment, and subscribe. It really means a lot to me. And I hope you guys have a great day.